Friday, y'all.
Joining us now, Gordon Fellows, president of the Mississippi Bankers Association. Gordon, how's it going today?
Gerard, happy Friday. Good to see you. It's always good to be a Friday, and it's always good when it's Independence Day week, right?
Absolutely.
Lots of stuff happening, but good to be with you today.
Appreciate it. Appreciate you coming on. So a lot of stuff going on, of course, in the financial markets, in the stock markets, in the economy. It looks like we got a jobs report today that suggests that hiring is still robust. And earlier, I suggested, at least to get your thoughts on this, that kind of almost gives the green light to the Fed to dump another rate hike on us, probably 75 basis points again. Had we seen those numbers come in below expectations, that may have changed the next interest rate action. But right now, it looks like 75 basis points is in the books. And now they're suggesting, based on the minutes from last month that we got this week, we might get another 75 basis points in the next month. So that's a lot of raising in a short period of time.
Yeah, I think you're right. And, a couple things that are worth pointing out. One, Mississippi is a divided Fed state, right?
Yeah.
So the Fed breaks the country down into regions. The north half of the state is Fed St. Louis, and the southern half of the state is Fed Atlanta. And the president of Fed Atlanta is a guy named Raphael Bostic. He was actually on CNBC this morning after the job report numbers came out, and he has responsibility for kind of keeping up, with what's happening in Jackson and South, along with parts of New Orleans, the New Orleans market, Alabama market, and Atlanta, and Florida. And Dr. Bostic has a seat on the Open Markets Committee, right? So he has a vote on what the interest rates are and will be, and he sort of indicated he expects 0.75 next in July. I think that's probably right. Rates have been going up. They're probably going to keep going up for a little while. I think that means a couple things. For consumers, probably a really good time to talk to your bank, right? Like the banks don't set the rates, right? The banks have to go by what the Fed sets. And so if you're a consumer and you got an adjustable rate mortgage, if you got a credit card, an auto loan, some of that stuff could be changing. And so plan for that, right? Don't be surprised. Now's a good time to go talk to your banker, kind of get educated on the specifics of your financial situation and what that might mean as rates kind of keep going up for a little while. Sort of more broadly, rates have been really, really low for a really long time, right? I mean, if you kind of go back historically and look, Gerard, in the 2000 range prior to 2001, rates were usually around 6%.
Yeah.
They were higher than that before that. And then, so after the financial crisis in 08, 09, we kind of got down to less than 1, and then we were starting to tick back up. And then when the pandemic hit, we went back down to less than 1 again. So, yeah, they're ticking up. And you're right, it's a lot to absorb quickly, but sort of in the broader picture, we're still talking about 2%, and that's still way less than 6% in 2001.
Yeah.
So that for perspective, we're probably going to keep going up, but a lot of people talk on the news about, is this going to be the 70s, or we're going to get in a situation where we got really, really high interest rates? We got a long way to go before we get to that. So we haven't really. I talk to bankers every day, and most bankers have not seen yet a decline in loan demand. We're not seeing economic contraction around the state, which I think it's a good sign, right? The economy is still really strong, and so maybe that means the Fed has a decent sized window to kind of try to land this thing without tipping us into a recession. Well, I don't know. They got a hard job.
You answered my next question, which was, what are you hearing from your members? But your members are reporting that demand for loans and credit still strong, even with the increase in rates. Now, Gordon, is that commercial and consumer?
Yeah, so I think most of the banks, when I talk to them about loan demand, they're normally thinking about commercial right
yeah.
now.
Yeah.
Right now, I think the mortgage kind of stuff all kind of happened when the rates were really low. There were a whole bunch of refis in 2020 and into the early part of 2021. That I think that's tightened up a little bit. But commercial growth is good. I think, and part of that, Gerard, so much of this is supply and demand, and so a lot of businesses have been backlogged for so long on getting stuff that they needed, right? So if you tried to get equipment and you may have ordered it a year ago and you thought you were going to get it 6 months ago, and you may just now be getting it, and so now you need the credit to spend the money to do whatever you needed to do to make money from that equipment you purchased. So
absolutely,
some of that supply chain stuff is starting to move through. And that's like loan demand is kind of keeping up with that, if that makes sense.
It makes total sense. Sure. Makes total sense. These were purchases, frankly, that were put off during the pandemic because you weren't operating at full capacity. You still got to have this stuff to operate, and most of the time those asset purchases are financed. Most companies are going to go out and do that with credit. Don't have enough cash to make those kinds of big investments. That's good to hear that the industry still doing well. I wanted to ask you about a couple of reports I've seen about kind of an increase in repo. I'm not sure if it's repo or reverse repo, but what's going on there?
Yeah, so I saw that as a potential question, and I got to tell you, George, when I talk to bankers, that hasn't really come up.
Okay.
Right? We're talking about interest rates. We're talking about loan demand. We're talking about a whole bunch of other pieces. Sort of what are the economic headwinds and what are the economic tailwinds? I know that there's stuff happening in that space, but that's just not something that really has hit many of my members' radar, at least not back to me. Now we have talked a lot about something you might care about, what's coming out of D.C. regulatory.
Absolutely. That was my next question.
What's changing in that world? I bet that was your next question.
Yeah.
That's something we're talking about a lot.
Well, and let's just kind of set it up. We got the Supreme Court ruling that, to a great extent, diluted the authority of the EPA, and the EPA is an agency that regulates a lot. The banking industry may be the most regulated in the country, honestly. So what does this mean?
So to the basis of your question, there are a ton of federal agencies that regulate the banking industry. First, the banks are mostly in Mississippi chartered by the state, so they're regulated by the Mississippi Department of Banking and Consumer Finance. Then they're also regulated by the FDIC. Then they're also regulated if you're a national bank like Trustmark National Bank or First National Bank of Clarksdale or Pike National Bank. You could be regulated by the Office of the Comptroller of the Currency. A lot of banks are regulated by what's called the Consumer Financial Protection Bureau, which has direct insight into banks that are larger than $10 billion, but they also write rules that impact everybody. And the Consumer Financial Protection Bureau is sort of the newest agency. It was created by Dodd-Frank.
Yep.
So it's only been around for a couple of years now.
Obama administration, during the Obama administration.
That's right. And, they're still kind of finding their place. Okay. Right? Because they're still pretty new and you get into personalities who run these agencies and when they don't have a long history to balance off, the personality of who runs it kind of matters a lot, right? Yeah. And so that agency is beginning now to promulgate rules that could be really challenging to the credit availability. And they kind of push these rules out in the name of protecting consumers, but oftentimes, they really don't understand rural states like ours, right? And so the idea of protecting a consumer in downtown Boston may mean something really different than protecting a consumer in Greenwood, And so we're kind of nervous about some of the stuff that might be coming out of the CFPB. Particularly as they still haven't finished Dodd-Frank.
Unbelievable.
There's still rules from Dodd-Frank. This was passed in 2010, right? So we're 12 years later. There's a small business data rule that's going to be coming out in the next 6 months I really worry about constricting the availability of small business credit, right? I'm really, really concerned about what that rule is going to be, and they've made it much more complicated than the statute says they had to make it. So to your question of what are the courts going to do in this space? If you see any sort of the Supreme Court pulling back any kind of financial regulation, it will probably be related to the CFPB, potentially kind of going above and beyond what Congress intended for them to do. There's no case pending on that right now. There's nothing in the works, but that would be the most likely, I think, scenario, sort of similar to what the court just did with the EPA. Does that? I know
it does. It answers the question.
Together a little bit.
We already had some of that rolled back. We're about out of time, but Trump rolled some of that back, as you recall, some of Dodd-Frank. We got to a point where our community banks couldn't make loans. It got to that point almost, literally.
Yeah, that's right. And during the Trump administration, there was a bipartisan bill. It didn't get a lot of coverage.
Right.
It was one of the few things that passed bipartisan, S2155.
Remember that.
Mike Crapo was the lead Republican on it, and John Tester was the lead Democrat. And they pulled back a lot of pieces of Dodd-Frank, and that helped open credit availability. That went along with the president's sort of rule of, if you're going to – oh, sorry. I keep talking.
No, that's perfect. It was excellent. Gordon, thank you. It was excellent. Appreciate that. Thanks for that insight. That's what we want to hear. I think it's good news. Thank you, Gordon. We'll talk soon.
Thank you.
Middays will be right back. We got Jeremy Nelson.